Hey, so in this video, I'm going to show you how you can make some of the biggest gains in investing through value investing. And this is how sometimes you can find the best multi-bagger stocks. So I'm going to go over one of my previous investments I did in Big 5 Sporting Goods, which I invested in 2019, and then I sold it in 2021 for almost a $229,000 profit and a 622% gain. So I'm going to go over the basic fundamentals that I was looking at with buying this stock that led me to believe it was extremely undervalued and led to the gain I made. And in fact, I didn't even sell it close to the top. I only sold this stock at about $15 and ended up going up to 45. So I hypothetically could have made a lot more, but I was still happy with the investment overall. So just first, this is the whole transaction history, my capital gains, my dividend income I made, and the covered calls. So you can see I invested about $37,000 at about $2.29 per share, made a total profit of $204,000, almost got another $6,300 through dividends. And the interesting thing is Big 5 Sporting Goods actually raised their dividend while I was holding it. And this is the one nice thing is when you're finding these value stocks that also pay good dividends, it's reducing your cost base as you go along. So I've put $37,000 out there, but I'm getting money back every quarter. That's reducing my risk overall as I'm waiting for the stock price and the company to turn around. And then on top of that, I was also able to enhance my income a little bit more through selling some covered calls. I sold some early on to get a little bit of extra income, and then I exited. I was planning on exiting the stock by selling covered calls at all, which I did. As you can see, I sold covered calls at $15, and that made up a total of almost $18,000 of profit. So let's dive into the financials. I'm going to briefly go over some of the key things that I look at to basically see that this was a value stock and not a value trap, which many people fall for when value investing. So the first thing I like to look at is the revenue. And overall, the revenue is on a general slow uptrend. But in 2018, 2019, this is generally the period when I was buying the stock. As you can see from the things, it was May to August I was buying in 2019. There was a little contraction in revenue, but it was nothing too significant and not much more what they had maybe seen before in the past or even here in 2014. And this was also during when the general retail apocalypse was happening from 2015, 2016, and all retailers were in huge declines. And I think this is why Big 5 Sporting Goods got so undervalued at this point, even though the fundamentals didn't really show that there's that much deterioration. Also, the gross margin was typically 32, 33% during this time. It did drop, you can see very slowly, but it was dropping very minimally when we're only dropping to maybe like 30, 31%, 32% from 33 to 32, that's a very minimal gross margin decline. And the reason why the gross margin is important is if you have a declining gross margin, it might mean you're losing a competitive advantage. And well, this was kind of true because things like Amazon were coming online and taking a lot of the sales away from the physical retailers. It did not affect Big 5 Sporting Goods as much as a lot of the competition and other retailers. So one of the other important things is what was the trend of their selling and general administration, because this was a key thing about the turnaround of the company in the 2018-2019 period. And you can see just like the revenue, it was going up, but it was outpacing the revenue. And this is a very common thing that companies do. But once they notice this and that they were hitting that point where they're starting to lose some money and not making some profits and their revenues declining, they cut it down. And that was one of the main things I was reading in their investor relations report. Also why it's very important to look at the investor relations report and see what management strategy is. They pretty much said that, we think the business is overall good. We just need to cut some of this administrative. And you can see they're able to do that. In 2017, 2018, they had over $300 million in selling and general admin. They were able to load it to 297, then 275. And that worked out very well because it was able to flip them back into profitability. Another brief thing to look at, interest expense for them, it's almost nothing. It really wasn't increasing overall. 2 million, 3 million. That's more or less what it's been in the past. Not very significant. This isn't a big expense for Big 5 Sporting Goods. And now their net income, as you can see in 2018, this was right after, end of 2018, this is right after I bought the stock, they were coming off losses, but the loss was only $4 million. And for a company of the amount of revenue they're making and their financially strong balance sheet, which I'm going to show you a little bit later, this seemed like a very minimal loss that they could easily weather and turn around, which they did. And you can see before they're making between 10 and 20 million. So if we're just able to cut a little bit of selling and general administration, just trim a little bit of the fat, as they say, it seemed like a very easy turnaround play to get to that 10, $20 million of profit again, which they were. They also did heavily benefit from the pandemic because they were able to sell their goods at much higher prices than they probably normally would. So let's look at the balance sheet now. Just a few key things on the balance sheet we really need to take away here is we want to look at their current ratio, which is the current assets over the current liabilities, and see what their overall balance sheet total assets and total liabilities are looking at as well. So in this time when I was buying the stock, it was 325 and 341 million for the total current assets, and our total assets were around 420 million and 689. But this is also nice that they didn't have any goodwill, because sometimes people look at a balance sheet, they think it's really strong, and they're throwing in the goodwill there, which happens during acquisitions, and it's not really a real asset. You have actually don't have anything real in that case. So these are real assets they have on their balance sheet. So now looking at their liabilities, during the same period of the liabilities, they only had 151 million in current liabilities in end of 2018 and 223. As we just went over, their current assets were 320 and 340, so they had well over $100 million more in current assets than current liabilities. So even though they were hitting a little bit of a rough patch, there wasn't any big liquidity problems or issues with them paying their bills when they have such a nice current ratio. And also their total liabilities is actually fairly low. And as we know, we already looked at the interest expense only being 2-3 million. You can see their total long-term debt very, very minimal as well. And this left the company with a total, basically, stockholders' equity. What is the tangible equity on the balance sheet remaining for the investors was around $180 million. And this is very interesting because at the time when I was buying Big 5 Sporting Goods, its market cap was trading under $50 million. So this was trading at pretty much a quarter of its book value. And this is one of the reasons why I thought this is a very acceptable margin of safety to buy into Big 5 Sporting Goods, because yes, it is possible they could deteriorate a little bit more, but they had a strong enough balance sheet that they could weather the storm. And when I'm basically buying this at a quarter of book value for a company that should be able to turn around back to profitability, which they did very quickly, I saw it as a screaming value deal. So next, their cash flow. Cash flow statement is nothing too remarkable, but you always want to go over it to see how things are going. At the end of the day, you can see their cash flow operations mostly positive. Actually, it was the end of 2017 they had a little bit of negative cash flow from operations. In 2018, 2019, it was still positive. So, and then all they really do after that is they just do some purchase property, plant, and equipment. That's pretty normal. They don't have any other basically purchase of businesses or anything else really complex going on. Big 5 Sporting Goods is a very, very simple company. Not all companies' financial statements are this easy to look at. And you can see when they do have the little bit of extra money, they throw a little bit into the repurchase of stock. You know, they're issuing some debt, they're paying some debt. Usually this is just on a revolving credit line for the company. So they have all this money available and they borrow it when they need it, but they're always trying to pay it back so they don't have to pay that interest. And I like how Big 5 Sporting Goods was never into accruing a lot of debt on their balance sheet. They're always trying to pay it down, which is why they were able to weather when the bad times came and do quite well going forward. And then you can see the cash flow from dividends here. They're paying it out. Decreased a little bit in 2019, but then it started increasing again. And this, provided some very good cash flow for me from the investment. And, sometimes if the company cuts the dividend when it's not going well, that sometimes can be a warning, but they didn't cut it that much. They just cut it in half, and their dividend they were paying was excessively high before. So that really didn't concern me too much. And then we can just look at, the free cash flow at the end of the day, which is just cash flow from operations minus the purchase of plant and property. And it's generally positive overall. So except for, again, 2017. So even though in 2018 they may have lost a little bit of money, they didn't actually have net cash going out of their company. They had still positive cash flow of $9 million. So this was also one of the things that told me that even though they're hitting this little rough patch, it's not like they're losing so much cash flow that they're going to be struggling, having to take on debt, do dilution, which they didn't have to do, and they were going to recover very nicely. So now I'm just going to show some charts of their financials. And what's nice about looking about the charts of the financials is you can see where the trend's going and get a better visual representation of what's happening in the company. So in this first one here, I have Big Five Sporting Goods revenue and earnings trend. So you can see very visually, it's easy to see revenue is up and to the right, and other than the recent boost, their EPS was relatively flat other than this rough patch we had, which was why I was able to buy Big Five Sporting Goods at such a tremendous discount. And price to sales, when you have a very steady company like Big Five Sporting Goods and basically your bet is that, oh, they're going to revert back to the trend they've been in before, which was my thesis on it and kind of my investing philosophy, you can use something like their median price to sales ratio to kind of figure out a fair value. So you can see in Big Five Sporting Goods, their median price to sales ratio has been about 0.31, or that puts the stock at about $12.70. And it goes higher, goes lower, goes higher, goes lower. So when you're buying it lower, that's when you're undervalued hypothetically. And because the sales got a little bit worse, as we already went over, we were able to buy it at a much, much lower price than normally was. The price to sales ratio was only 0.05, I think, when I was buying it, compared to the normal price to sales ratio of about 0.31. So it was a very good value. And then the price to book value, which I was already going over, basically, when I was buying in 2019, the price to book value was about 0.24, and typically, on average, their price to book value usually would trade at about 1.36. So the kind of idea behind this value investment was, even if they were just able to start getting a little bit profitable again and basically wipe that idea of bankruptcy off the table, even just getting back to book value would have been a tremendous 400% gain. And it was actually a little bit more for me, even though I missed out on the vast majority of gains. I hope you enjoyed the video and you've learned a little bit more about value investing and how to avoid value traps through analyzing the financial statements. Leave a comment and let me know your thoughts on Big Five Sporting Goods or any other stocks you want me to look at analyzing. I plan to do a lot more videos in the future. Remember to like, share, and subscribe to my channel, and I'll see you in the next video.